The final chapter for this week is all about sentiment. So, as you may have noticed already, or at least from watching some, stock reports or economic reports on the news, there is a lot of emotion involved when it comes to markets. When it comes to for investors, for traders, for basically all market participants, emotion is a factor that plays a very large role. So in decision making, but also in the way that assets are perceived, that markets are perceived, right? Think back of the tulip bubble, for example, where an asset just grows, to like astronomical values because everybody's super excited about it. Now, to understand how that sort of works, or having a closer look at that, we'll do at a later stage, right? When the week with risk management and trading psychology. So we'll look a lot at emotion, for example. But for now, we want to just look at what we can use to sort of like gauge sentiment. How can we measure sentiment? Because it is a crucial part in our analysis, if you will, to find out like, okay, I've got my fundamentals lined up for a company or a crypto. Next week, obviously, maybe the technicals as well, so price analysis. But we also need to understand like, what is general market sentiment right now? Like, is sentiment really bearish, so really negative, or is it really bullish? And how does that affect our decision making? So examples could already be that one saying is that buy when there's blood in the streets. And that basically means when investors or traders or market participants are really, really panicky, they don't want to have anything to do with their assets anymore. Everybody's, dumping their assets and selling it at discounts. Well, that usually is the time when, as a neutral market observer, your opportunity of actually buying back into the market or buying into a market is going to be there. And so you need to be able to sort of like measure that sentiment, the sentiment around a market or an asset. And the better you do that, again, as with everything, the better of a market participant you're going to be. And you're actually going to get to a point where when everybody's negative, you actually have the capability to remain calm and say like, well, I think this is actually right now, right here, is very fair value for an asset, and I'm going to jump in. Speaking of jumping in, so just one slide that I actually want to highlight. I mentioned it already. How is a market or an asset perceived? I think that is really crucial to have in the back of our minds when we are, with our bag of money, trying to make investment decisions. So where are we at in an asset's life cycle? How is it perceived at a certain point in time? We'll talk more about the cyclicality of things at a later stage. So where we are in a certain cycle and how we can read that from, for example, a price graph. But it's already good to get to know the signals of like irrational exuberance, or extreme panic, right? So how can we sort of measure that? Are there things that we can use? And yes, there are. And of course, we're going to find out in this video and in the sources. But you can also, it helps, we can establish a trend. We can establish, like with sentiment, you can also see how strong a trend, for example, is. How many people are talking about an asset. For like on Twitter, we have something called cash tags, where like a $sign and then the ticker, so either a crypto or an asset. You can already, for example, say like, okay, if this asset is trending, like Nvidia, for example, again, as an example, you can see like, hey, everybody's paying attention to this. And that has all sorts of effects. So that is, important for liquidity, but it's also important for your, like your evaluation of the asset that you're looking at. Liquidity and sentiment and all that stuff. And then in combination with technicals, we'll look at more and more. Optimism and pessimism and exuberance and panic. And you can very clearly see that in a price chart. I've refrained from showing you a price chart because like we'll do that next week, because when I start doing that, really the nerd comes out, and possibly the videos will be a bit longer, but so for now let's focus on this, and then after we've done technicals, we can really start to paint this entire picture, as we hope to do. Okay. So sentiment analysis, again, read it in your own time, calmly. I just wanted to make you, of course, aware of it, of that something like this exists. And there are several indicators the VIX, for example, the volatility index, that is one important measure but also the fear and greed index. So this one is for the traditional markets, but we also have one in cryptocurrency markets. And it basically says like, okay, what is the level of optimism or greed, if you want to call it that, and what is the level of pessimism or fear? So this, like fear and greed, they are sort of like the polar opposites within markets, and that's where you want to, be very aware of where we are. So when you hear everybody talking about an asset, generally you will see this go towards greed or extreme greed even. And when we are in these areas, the extremes, that's when we also need to be very cautious. Instead of getting over emotional and super excited, that is the moment where actually, if you want to perform better than the average market participant, you need to remain like clear-headed, level-headed, and say like, okay, well, look at this exuberance. I've made some profits. It's a good time to, either reduce my position or just say goodbye to the asset for however long that may be. Take your profits and move somewhere else where maybe we're not in an area of extreme greed. And of course, during market crashes, when this reaches peak fear levels, that's when that's when you want to start paying attention to actually becoming a buyer again, right? So at the top of markets or asset prices, usually there is the most greed and the most optimism, and vice versa for at the bottom when we are, really when price has really been punished down, if you will. This website, so Benzinga, here you can, one way of sort of like gauging sentiment is looking at how investment banks look at assets, or how, other big financial institutions look at certain assets, what their sort of recommendation is. Is it a buy? Is it a hold? Is it a sell? How strong of a buy is it? So you see all these grades, upgrades, downgrades, etc. And basically, you can, like 1,000 listings, this is something that you can incorporate into your analysis, right? You say like, okay, I've done my research. I think I'm good on whatever stock, like, I don't know, this one, Williams Sonoma. And then you see like, you're not alone. Analyst firms will actually have upgraded their advice. And they say like, yes, the target is indeed like X percentage higher, right? It's just something that you can incorporate into your thinking. So very cool platform. As I said, the crypto fear and greed is there as well. And it's very interesting to see like historically what that has done. And what we'll do later, for example, is we like compare the fear and greed index. We'll have a chart and we can overlay that with or lie that next to like the price chart and see like, hey, does that actually make sense? Is there some correlation between like the extreme fear and also low price levels, which actually would have been a very good place to buy, right? That's sort of like the game we're going to be playing more and more. That's it for the source. So a slightly smaller topic. Also, I think I can keep this a bit shorter. I know I keep repeating that and not, stick to that. But anyway, the advanced source, not the ultimate source necessarily. I love this lady. She has a great sense of humor, very dry. But she also has a very good video on sentiment analysis. So yes, it is advanced, but I would recommend everybody to watch it. It's not that long and it's not that hard to understand. And it's a good way of, making or creating this perspective for yourself. Why sentiment analysis is just a part of the puzzle, piece of the puzzle, and a part of your total framework. Okay. So to close, is it important? Yes, most definitely. Mainly also for that saying, like buy when there's blood in the streets. Or another one is buy when others are fearful, sell when others are greedy, right? Those are like ancient market wisdoms that time and time again, due to the cyclicality of things, and we'll talk about that at a later stage, you will just come to find. And you test it for yourself, right? Don't take my word for it. Like invest the time into markets, look at these patterns and see if this actually holds true and if it's something that you can work on. I think that's it for this week. More, of course, in the lectures. And as always, questions about this stuff, Discord. And don't worry, we'll go, even deeper into this. And next week with technical analysis, we've got another piece of the puzzle to come to, to see whether an asset is properly valued or undervalued or overvalued. And, if it's time to strike, time to sit on our hands, or, time to maybe say goodbye to all our assets and rest in whatever currency of choice that we have at that time. Cool, that's it. Good luck, enjoy, and see you in the next video.